Let me start by saying I'm not a technical analyst or a chartist or someone who uses technical analysis to make investment decisions. But I am someone who will look at specific technical indicators and treat it as another data point to evaluate my decisions. Typically, I look at this information to validate some of the moves I intend to make. Let's take a closer look in the world of technical analysis and indicators I like to glance over. Hey friends, welcome to Think Finance. My name is Raj, and this channel is about making and managing our hard-earned money. I know people who have multiple screens with charts and reports and alerts popping all day, all the time. And they use this information to make trading and investing decisions. I'm a long-term investor and a trader, and I've been doing this for a long time. I don't make my decisions based on technical analysis, but will treat technical analysis as a good source of information. In this video, I'll talk about some of the indicators I look at and also some services I use to chart this information. Two services I use and love are Stock Rover and Barcharts. They both are free, but also have premium options if you want to take it to the next level. There is a bunch of useful information on both. Barcharts is great for charting, analyzing stocks, recommendations, and catching the news. With Stock Rover, you can do all of this, plus it allows you to connect your brokerage account and do some in-depth portfolio analysis. I'll drop the links to these services in the description. There are tons of other services that offer similar set of features. This is what I prefer to use. Your mileage may vary. So here is what I look at, and this is how I have configured Barcharts and Stock Rover. I will go through each of these indicators in detail and talk about what it means and what can you take away from each of these. Let's start by looking at a basic candlestick chart of SOXL. I have also dropped a line chart for S&P. The chart gives me few things: price action for the period, percentage gain year to date, and comparison to S&P. Some takeaways for me: SOXL is up around 90% for the year compared to 24% for S&P. It was mostly sideways, but recently SOXL has taken off. Some can argue it is time to lock some profits. Others might call this a breakout or start of an uptrend. More on that later. MACD is simple yet a powerful momentum and trend indicator. It has the MACD line in blue, signal line in red, and the center line. The idea is when MACD is above zero, price is trending upwards. If MACD line is below zero, price is trending downwards. Also, when MACD line crosses below the signal line, it means price is falling. And when above the signal line, price is rising. Simple, right? Now there are so many different ways to analyze and use this indicator. You will often hear about convergence, divergence, and everything in between. Here is how I use it, and this is what my setup looks like. Typically, I use EMAs or exponential moving averages 9 and 23. The defaults usually are 12 and 26 periods. I'm looking for the 9 EMA to stay above zero. When it goes below zero, that typically to me is a bearish indicator. So, as an example, as long as the blue line is above the red line and the center line, I don't care. I may think about closing a position only when the blue line crosses the center line, because that typically leads to trend reversal. When the blue line is under zero and crosses the red line, I might think about adding to my position. Again, there's a lot more here, but this is how I use it. Another one that I like to watch is RSI, or Relative Strength Index, a simple oversold or overbought indicator. Floats between 0 and 100. When RSI is less than 30, it is considered oversold. When above 70, it is considered overbought. I usually look for under 20 and over 90 as thresholds. Hardcore analysts like to look at divergence, basically when the indicator is moving in different direction than the price. For example, price rising but RSI dropping. It shows that the current price trend is weakening and could reverse. I use it to identify extremes. For example, if I want to open a new position and RSI is in the 90s, then I might consider waiting for a pullback. Or when the RSI is in the 20s, might be a good time to buy the dip or add to an existing position. Just be aware that RSI can hang in oversold or overbought state for a while, and like with every other indicator, it is usually a good practice to look at this in combination with other indicators and data points. Next is ADL, or Accumulation Distribution Line. It tells you how much money is flowing in or out of a particular security. If it is trending up, means buying interest. I typically glance at this indicator to validate buying interest. More inflow means more buying, which typically confirms an uptrend. Again, you can look for divergence. ADL falling but prices rising means a trend reversal is around the corner. Another trend indicator is Average Directional Index, or ADX. Pretty much measures the strength of a trend, and it can get a bit complicated. Again, I'm just looking for visual confirmation. Stock Charts has a detailed explanation on how this works. Here is a quick summary. Typically, ADX line in blue on this chart, above 20, means a strong trend in either direction, up or down. Now combine that with DI lines. When DI plus, which is the green line here, is above DI negative, means an uptrend. DI negative is above DI plus equals a downturn. Of course, there's a lot more here, and I'm just trying to simplify as much as possible. Here's another indicator I really like. It's called the Keltner channel. It is similar to Bollinger Bands and gives me upper and lower channels within which the price is expected to float. It is based on average true range, or ATR, which is a volatility indicator. The channels are typically set 2 or 3, as I like to use, ATR values above and below the 20-day EMA. So it accounts for day-to-day moves in the stock price, which then means moves above and below the channels are relatively rare and are considered extremes. A surge above the upper channel line shows extraordinary strength, while a plunge below the lower channel line shows extraordinary weakness. Such strong moves can signal the beginning of another trend up or down. Typically, what I have experienced is prices often take a breather and then resume this new trend, up or down. Nvidia is a good example to showcase this indicator. For the year, it has floated within the range, but recently it has surged big outside the upper channel. Maybe it needs to cool off a bit but looking at the strength, it will most likely be temporary. Tesla, similar story. PayPal, on the other hand, looks bad. Looks like a new downtrend is set for now. Finally, when prices are range-bound, you can use the channel boundaries to identify overbought and oversold levels and trade around it. I personally like to use RSI for this purpose. No one indicator gives you everything. I treat this as just another data point. Do I look at these every day? Not really, but if I intend to make a big move, maybe I won a lottery and have 10K to invest, I will glance over these indicators before making my move. I'm looking for things like trend, momentum, extreme moves in one direction, oversold or overbought conditions, and price action in general. Just trying to do my due diligence. But I don't swear by what I see on the charts. Okay, let me know in the comments about your favorite indicators and how you use them. Thanks for watching. I'll see you in the next one. Peace.